We dismiss history at our peril.
Liberty Nation Radio with Mark Angelides.
Welcome back to Liberty Nation Radio. The specter of prolonged inflation is looming over the United States. Just a few short months ago, the American people were assured that there would be no inflation. Then that was backtracked to include merely transitionary inflation, or transitory, in fact. And now we have inflation with us and likely to stay for the foreseeable future. How is this going to impact savers and investors? And what shape can we expect the economy to be in as the 2022 midterms approach? Helping us find the answer is Liberty Nation's economic correspondent, Andrew Moran. Welcome, Andrew. Thanks for being here.
Thank you for having me.
Now tell me, Andrew, what is the situation with inflation right now? What are the numbers?
Not good.
Succinct. Thank you very much. We'll be right back. Oh, no. Do you have any more information for us, Andrew?
Yeah, so the annual inflation rate is at 5.4%. It has been this high in 13 years. Producer prices have topped 7%. This is how much it costs to produce things. That's also at 11-year high. The University of Michigan's consumer inflation expectations is at approaching 5%. A recent Wall Street survey even found that investors think that a higher inflation will be here to stay for another year. So overall, life is becoming too expensive for most Americans these days, and there's no respite in sight. Everyone still thinks that inflation is here, except for many of the Washington power brokers.
Okay, now, how can we expect this to continue? You mentioned that Wall Street expects it to last for up to a year. So what measures are the government taking at the moment? Or are they taking any measures? Are they just assuming that it will go away at some point, or at least not be reported on by the media?
I think they're taking an approach of, please stop, please let inflation just wind down, don't come anymore. I think so. They're not preparing for anything. At the same time, there really isn't there's no anything that they can do. The Federal Reserve has already said that they're not raising interest rates for another 2 to 3 years. They'll probably delay that because they're worried about hurting the economy if they do pull the trigger on a rate hike. The federal government are still planning to spend trillions of dollars more on top of the $4 or $5 trillion the government already spends. So they're not preparing for anything. Treasury Secretary Janet Yellen said rapid inflation is here to stay for several more months. And then even from a market standpoint, which is also contributing to the higher prices, these higher commodity prices, whether it's energy or agriculture, something the government can do about it. You have weather playing a factor, taxes in foreign countries, speculation of investors, output, supply and demand. You could take the China route and say that you're clamping down on the commodities market, but that would be egregious for a market-oriented economy such as the United States to even take such a route.
Okay, and how does this, let's call it an alleged Washington blip, how does it impact those who have money saved in the bank or money to invest? How is it affecting the average American?
Yeah, well, so this hurts savers because now the money that they set aside for all these years, it purchases less. It's a challenge for most of the retirees who live on their savings. I was reading a report on CNBC the other day talking about many American retirees. They're losing sleep because the money that they set aside plus the Social Security benefits they have, it's not keeping up with the rate of inflation. But overall, I think it's something that everybody should be concerned about, whether you're unemployed or you're a student or you're middle-aged or you have a family, because now your dollars, or in your case, the British pounds, they're buying less as time goes by. At this point, your only option is to invest your money, which can be risky for a lot of investors because, whether they don't have enough experience or, the risk tolerance is as low as it is. But at the same time, your only alternative is to invest. If you want to beat the rate of inflation, you'll need to find a stock that pays a dividend, or you need to leap into an index fund like the S&P 500, because then that will at least generate annual double-digit returns and hopefully beat today's rate of inflation, which is around 5, 6, 7%. And some even say that rate is even higher. Like if you go to John Williams' shadow stats, he'll say that inflation is actually 10% because of the way the government's measures inflation. So overall, this is one of the reasons why interest rates are suppressed because the central banks, they nudge people into the stock market with these low rates. But which is interesting, if I may, if you look at Sweden, when they had sub-zero interest rates, the central bank at the time, the Riksbank, they said that, we have sub-zero interest rates, so people are now going to start investing their money. But it turned out it had the opposite effect because the unintended consequence was people are fearful when you have negative rates that an economic downturn is going to happen or a recession is going to occur. So these people were putting their money in their microwaves and under their mattress. Seriously, too. I'm not kidding.
So was all of this inevitable, Andrew? I mean, you were warning about it since well before the Fed realized on the pages of libertynation.com. I mean, what were the warning signs and why were they ignored?
Yeah, well, yeah, I was on the Uprising podcast last spring talking to Scott Cosenza, the host of the show, talking about the inflation bomb and the inflation tsunami, and all of this was widely expected. I don't know how anyone at the Fed or the White House, whether it was the Trump administration or the Biden administration, could not see this coming. When you create 1/4 of all U.S. dollars ever printed in U.S. history in less than a year, you're going to have this massive inflation. Plus, I also had the benefit of monitoring the markets of what was going on because I also write about commodities and foreign exchange. So we look at the copper market, for example, there was a coming supply deficit. So when you have all these governments clamoring for copper at the same time to stimulate their economies, build infrastructure, you're going to have this massive run on copper prices. So if you comb through the data, it's common sense at that point that you're going to have inflation. So I think, as I've alluded to before, I think all these policymakers we're just burying their heads in the sand and they're hoping for this whole thing to just blow over.
I mean, we've long heard the adage when it comes to elections, it's the economy stupid. Now, how do you see the present situation, foreseeable as it may have been, impacting the results of the 2022 midterms?
Yeah, I think President Biden, he's absolutely concerned about the inflation threat. He had a press conference recently targeting these inflation concerns among consumers. But at the same time, he pulled this incredible mental gymnastics talking about how his $4.5 trillion spending bill will somehow curb inflation. How out to lunch you have to be to think this would actually cure inflation. But overall, the Republicans, they're pouncing on this with just a year to go into the midterm elections. Mitch McConnell, he recently accused the Democrats of spending their way out of inflation, which is hilarious because what did the Republicans do for the last 4 years? They spent, but that's another story. Many polls have highlighted among the Americans that inflation is their primary economic concern more than unemployment. I guess you'll be seeing Republicans and Democrats hit the F5 button on their browsers to get the latest inflation data on those days that the consumer and producer price indexes are released.
All right, and are we likely to see any short-term corrective measures to give the country an economic boost other than spending $4 trillion, or at least the appearance of one as voters head to the polls?
Wait, you just answered your own question. Yeah, they're gonna be spending more to try to help consumers fight the inflation. The Federal Reserve, they've said that they're going to keep their foot on the pedal. They're going to continue with the $125 billion monthly bond purchases. They're not raising rates anytime soon. President Biden, he has signaled that he's going to cut spending anytime soon. The only thing that I think is going to happen is the administration with many of the Democrats, they're going to sign off on another fourth stimulus check. That's something Democrats have been clamoring for the last several months. They want another $1,200 stimulus check. Some even want a perpetual stimulus check until the pandemic is officially over, which, according to Fauci, that'll never be the case. So their only corrective measure they're going to employ is more spending because they think that, well, consumers are dealing with higher prices. So, of course, we have to give them a handout and start giving them more money. But what they should be doing instead is just raising interest rates, cut spending, and then you'll solve a lot of the inflation going on right now.
Andrew Moran, the potential next head of the Federal Reserve. Who knows? Many thanks to you, Andrew.
Thank you very much.
And we'll be right back after this short break with Liberty Nation Radio. We dismiss history at our peril.
Liberty Nation Radio with Mark Angelides. Who are we? We are Americans that believe in liberty. We are a project of the nonprofit One Generation Away. We are patriots who apply the founding principles to the issues of today.
And they keep moving the goalposts on us.
We are educators and commentators who love America and the Constitution. Who are we? We are Liberty Nation.